Much for the presentation. It's of course very limited to the country only. I was wondering whether you are having any comment regarding multinational organization, corporates who have come according to this law back from 15% tax to 9%.
Would you mind to repeat your question?
Right now, corporate, multinational bank, most multinational organization are paying something around 15% of taxation. Now, with this law, they are down to 9%, which is very good for them, and it will be attracting more business and let's say economic benefits for the UAE for the time being. I just was wondering whether you are having any comment on that one, whether they are going to go for the second amendment for this one or not.
Thank you.
Welcome.
Thank you very much. Very important question. And definitely, when the tax was coming, the government of UAE must have thoughts on those lines, how it's going to impact international businesses, and how the governments of other countries think about it. Where, when, if you remember, back in 2017, EU blacklisted quite a few banks in UAE, considering UAE is a tax haven, and a lot of people is bunking their profits. So it was one of the effort to help the other economic partner in the region, and to basically give a level ground for everyone to play. And definitely there is a benefit of the UAE government in terms of another source of revenue, but it is going to help the businesses where it gives a bit of competitive edge. For example, a company producing something from UAE, maybe they are enjoying the tax-free money, and the cost of operation is much less as compared to some other big players. And because of this 9%, now the companies who are paying 15% or 20%, so it's a kind of a level ground for the competitors as well. I hope I answered your question.
Thank you very much, but still the issue of double taxation remains there.
There are about more than 70 double taxation relief agreements. So, and the companies which are already taxed on their foreign income, they will be allowed to use the tax credit. I think one of the slides I have shown. So, as per the double taxation relief. But if it is not in between two tax regime, then unfortunately a person might have to pay double tax. But I think the UAE government is extensively going into those agreements.
Okay, thank you.
My question is related to free zone companies. You mentioned that there are a qualified income that will be 0%, but there are unqualified transactions or income. Could you kindly explain about that? I'm assuming that it's related to activities outside the free zone, but how that can be proven. For example, if a company is an online-based company, that they have transactions outside the country or within the free zone, as well as some customers are within the mainland. However, the relationship is more of online relationship rather than a physical relationship. How they can come to know that these are qualified or unqualified income.
Thank you, brother. First thing, how they come to know, they will never know. The only time they know when they do tax investigation and tax audit. When they ask you to provide the supporting documents, then they will know where your customer is based, where you're delivering, where you're performing the services, etc. all the tax regimes normally work with a good faith. Whatever you're telling them, if you tell them you have no operation in the mainland, they will accept it. If you say, no, we have some not qualified income, they will still accept it. The only thing they're asking you to pay 9% tax on the unqualified income. But to define what is qualified, the law is silent about it. It says that the cabinet decision will come on it, which is under the, we call it tax, what do we call it? Another, when we have a first law, then we have executive regulations, which gives you a bit more detail and conditions, especially because this law normally refer that as per the conditions specified in the tax executive regulations. So these conditions will come. But why we can easily pick this up is what's it called? A news before the law come, and that news they mention this. The companies working as per the mandate given in the free zones will still enjoy the tax-free status. That basically indicates what they mean by qualifying. But how they're going to determine and how we can determine as a taxpayer, that will come inshallah.
Thank you.
Mr. Kashif, thank you very much. I'm sure I will invite you for next meeting in my company, inshallah, and visit you there for more questions. But when you are coming with the financial manager, then a lot of questions will come. Just I will ask two questions very important for us. One of that, we should, these taxes is self-statement or they are going for the investigation?
Self-assessment.
Self. And first is that still we need to, this financial statement, they should come and visit us for the and checking the investigation of the financial statement again. Auditor, I mean.
Thank you very much, brother. I think I have already answered this question. Even for VAT, for this tax, for excise tax, all kind of tax, they give you the instruction, follow this, do your own self-assessment, submit in time. If you don't do it, then we will do it. When they will do it, they will do it based on the industrial data and your own data. And it could be much higher than what you will do the assessment. They have every right, that is why they ask you to keep papers for 7 years. When the shopkeeper asks you, if you want to return an item, keep receipt. It's mean, whenever you go and return the things, they will first ask, do you have a receipt? Similarly, they can always come back, since they are a partner of 9%. They can see, okay, the same shipping company, another shipping company have a different scale, and for the same scale, they are reporting certain different income. How come their income is less or more? And they may like to further investigate. Investigate does not always mean an audit. They can ask you certain questions, ask you certain support, and they can close it. Or they can come and really inspect your books of account. That is why they ask you to keep the record for 7 years.
Thank you very much. If a resident of Dubai, UAE, who owns 100% of his company here, has another company who again owns 100% in another country, would that be any tax effect on what you make outside UAE in your taxes here?
Thank you. Let me just rephrase what you're trying to say. You have a company, 100% in UAE, and you also have a 100% owned company outside UAE, right? So basically, all three companies are related parties. two companies and the owner. If the owner is a natural person, he's also a related party. And if it's a company, it's also a related party. So the tax impact is nothing except when you do the transactions between them, the chances of you will do a person can do a favorable transactions which can give them a tax advantage. So that is why wherever the related parties are involved, that the law say you need to report those transactions, number one. In the declaration, yes, we did transactions with the related party. After 30 days or after 90, like in Qatar, it's after 90 days, you need to submit the master file and the local file, which explain you bit more in detail how the pricing was done for your own company. For example, you are selling medical equipment in the UAE, right? But you sold something to a company in Germany, which is your own company. In Germany, the tax rate is a bit higher. Oh, sorry, it's a bit, let's say, it's a less, for example. And you sold them cheaply. Then they can take the tax advantage. And that if your sale is underreported in UAE, that means the profit in UAE will be reported much less. So whenever there is connection and the related party established, the main things come is the transaction between them. As long as you're keeping the transaction at arm's length basis, the compliance will be just reporting. But if the arm's length transaction not happen, then it means adjustments in the previous tax returns, in the future tax returns, a bit more complicated. You have to apply all the formulas which I mentioned earlier on, transfer pricing method. Then you work out, did the transaction happen on arm's length basis or not? If not, what is the portion of the profit moved to Germany? That portion need to be reported back in the corporation tax return.
Okay, I have a follow-up question. Now, but our profit in the German company, nothing related to UAE operation, that's another company. I, as resident of UAE, do not have to report that income as my personal income and be tax liable in the UAE for it.
Okay. Let me try to grasp your question. You have a company, you're a
Two different
taxpayer.
companies in two different jurisdictions. They don't do business with each other, but they are owned 100% by me as an individual who has a UAE residence.
Okay. Now you as a natural person has a company, you will be taxable at your taxable income generated from UAE, number one. Number two is, you have that fixed establishment, you're doing a business at fixed establishment, and that business basically is also generating a profit. You have two companies, both companies generating profit, both companies basically giving you share of profit or dividends, right? So you will, by default, have to report because you're a resident, your international profits. So that company, but now there are conditions. If that company is operated in a tax regime where the tax rate is more than 9%, you can elect not to report. I don't want you to go into that detail, but by default, you need to report all your worldwide income except where your business is operating in a tax regime where the tax rate is higher than UAE tax rate. Because what then it means is, from a UAE perspective, you cannot move profit into the high rate tax regime because that's not going to give you a benefit. So they are at less risk. So that is why you have an election to make which outside UAE businesses which you want to report. The election is accepted on the basis of the tax regime if they're charging higher tax rate. For example, a company in UK where the tax rate is from 19 to 40% depending on the tax band. So if I have a company over there, the profit I will make over there, no problem. I will declare it to the government here, no problem. But they want me me to pay tax on it, then there is a problem. I have already paid 20 or 40%. Why would I pay 9% here? If I apply the tax credit, the UAE government will not pay me back. I have already paid 40%. The tax liability comes, let's say XYZ amount. My tax which I already paid is much more than that. But the tax I paid to the UK government, the UAE government will not pay me back. So that is why it is not in the benefit of even UAE government to ask unnecessary reporting. I hope I answered your question.
Well, basically what you are saying is that immediately when you get a UAE residency, your global income is taxable according to the UAE, whether you bring that profit in or not.
Yeah.
Because most of the companies do not pay dividends, because if you don't bring your dividends into UAE and keep it in the company in Germany, as per your example, whether still the money which has not been reached your hand here is taxable.
There are two things. Dividends, basically, if you receive a dividend in your company, that is basically your earning in your company, which is you're reporting here.
Yes.
If that company has an interest into other company. Now, if I as a natural person, have one company 100% here, have another company 100% over there, then it doesn't really matter I take the money out or not. It's simple, very simple. I have a self-employed business in UAE, right? I take no money out of it. Do I still pay tax on it or not? I pay tax on it.
Okay.
It doesn't matter I took the money out or not, as a natural person. But when we are jurisdiction, we are the legal entity, and in that case, if we have another company in Germany, it's mean that legal entity have shares in that company.
No, I'm just saying that me as an individual.
That's
as a
what I'm
natural
saying.
person,
So, the natural person can, it's up to him, do not withdraw any money, do not take dividend, but he still pay tax
okay,
on that company in UAE. Similarly, in that company, in other tax regime, you pay tax on it. Sorry, you withdraw money or not, you take dividend or not. If as long as that company is making profit, you need to report it. You have the choice to make an election. If that company is operating in a tax regime where the tax rate is at higher than 9%, you can elect not to report.
Okay.
Right. Any other question?
How about exchange gain and loss? Exchange gain or loss.
Yeah.
Exchange gain and loss. Now, there are two things. One is the money exchange companies, which are basically work and make money based on exchange gain and losses. They buy and sell.
No,
Right?
there are trading.
If you are in general trading, exchange gain and loss, as far as it happen, as per the normal course of your business, it's allowable deduction. You sold an item at a dollar rate at X date, you receive the money on a later on date
No, I
at a
can see
different
the
date.
euro fluctuates very high.
Whatever, if it happens in the normal, like definition is, as long as those expenses are to generate your taxable income, they are allowed to be deducted. So if you are internationally trading, the major risk you will take is the exchange losses and gains on the exchange. And the risk is same. Some days you will lose the money, some days you will make the money.
Same FCA is responsible for tax corporation.
Yes, FTA will be responsible for corporation tax. Any other question?
And the time is
Shukran, thank you very much for listening me. I think I took a bit of time. I hope